Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Sanjana Prabhakar, Index Research Specialist with Nasdaq Investment Intelligence, to discuss Nasdaq 100 outperformance on the heels of better than expected earnings, as well as some other macro factors. Sanjana, it's great to see you as always. Welcome back to Trade Talks, and give us a quick summary of what you saw with the Nasdaq 100.
Sure, Jill. So as you mentioned, the Nasdaq 100 has outperformed this year. In our previous trade talks, we have highlighted that the Nasdaq 100 has outperformed after a pretty challenging 2022, where multiple headwinds weighed on the index, including aggressive rate hikes from the Federal Reserve. This time around, wanted to zero in on what has been driving the returns and also highlighting the strength of the Nasdaq 100. And keep in mind that heading into 2023, there was much pessimism surrounding technology earnings, with multiple headwinds weighing on the sector, including a slowdown in the PC market, the chip shortage, heavy hiring, expense growth, and the Federal Reserve rate hikes. And the tech earnings recession that was sort of widely predicted did not end up hitting most of the index's large companies as deeply as expected. And you can see the proof in the very positive reactions of some of the names like Meta, Apple, and Microsoft. And we go into that in some of our slides here.
Okay, well, let's take a look at your first slide here with the year-to-date outperformance relative to benchmarks.
Sure. So as you can see, we have captured both the full year 2022 returns and the year-to-date returns. I think this slide is quite powerful. It points to the underlying strength of the constituents of the Nasdaq 100, many of which are in the forefront of innovation and technology. For the year 2022, the Nasdaq 100 was down 33%, primarily due to concerns surrounding the Fed rate hikes, which made investors wary of companies in the high growth space. And we have talked about that in our previous trade talks. And if you can see this year, the Nasdaq 100 has shown a remarkable reversal as the tech earnings recession did not play out. Many of the mega cap technology companies posted better than expected earnings amid a slowing economy at a time when investor expectations were fairly muted. And what's worth noting is that the Nasdaq 100 is now about 8 times the value of the Russell 2000, up from just under 6 times a few months ago. And the last time the Nasdaq 100 outpaced the Russell 2000 to a similar degree was in 2020, when extremely low interest rates boosted stock valuations. What we wanted to also highlight here was the remarkable outperformance, up 30% as of the end of May.
And let's take a look at some of the fundamentals here, Sanjana. We welcomed a $1 trillion market cap company in May.
Yeah, absolutely. And we have captured here the fundamentals of all big tech companies. And as you mentioned, NVIDIA has now climbed to a $1 trillion valuation, joining other big tech companies in that club. They posted better than expected quarterly results, up forecasts for the year, citing surging demand. And we believe that they're uniquely positioned to benefit from AI and machine learning and all the secular drivers in the space. And as you can see, all the big tech companies here, Amazon, Apple, Google, Microsoft, Meta, and NVIDIA, posted strong revenue and net income CAGRs in the range of 20 to 30%. And I think that this really illustrates the strength of the business models and the multiple levels of growth, which helped offset significant headwinds in a somewhat slowing environment. And as you can see here, Microsoft also has been posting strong results. They beat street expectations in their latest earnings, and they've committed to growing their artificial intelligence business. And shares of Microsoft were actually up 15% since the debut of ChatGPT, compared to a 9% gain for Google. And just a few quick highlights about other companies here. You see Amazon, which swung to a profit of $3.2 billion for the first quarter, up from a loss of $3.8 billion a year ago. You see Meta Platforms also beat street expectations, registering a 3% revenue growth after a challenging 2022. And we believe the company is finding its footing again after being negatively impacted by the Apple privacy changes, TikTok competition, Reels headwinds, and such.
And finally, let's talk more about the AI interest. It's at an all-time high, and companies have been rewarding stocks for it.
Yeah, absolutely. And as you can see in the final slide here, we have tried to capture the interest surrounding AI. I mean, I think you'd be hard pressed to find a newspaper that isn't talking about AI today, which jobs are at risk, which industries are likely to be best positioned to capture value from AI, and the buzz around ChatGPT as well. And I think it's safe to say that that there's less hype and more substance around AI today. And we have several companies in the Nasdaq 100 which are well positioned to capture the value from AI. And we have some numbers around this. We have some statistics that are pretty telling. Generative AI could raise global GDP by 7%, according to research done by Goldman Sachs, and expand profit margins by about 4%. And up to 70 companies will have integrated their technology into their businesses, according to a McKinsey report. And as you mentioned, investors have rewarded companies handsomely this year. NVIDIA has been up. And we are also noticing eye-popping investments. I mean, Microsoft has invested $10 billion in ChatGPT and has integrated it into its Bing search engine, its Azure cloud platform, and its Teams video, which suggests that, that they are heavily invested in the theme. And we believe that this surge in AI adoption has contributed to the outperformance of the Nasdaq 100 and other growth indexes. And there's been further boost to the markets over the last few days due to several factors, including the passage of the debt ceiling deal through Congress, the prospect that the Fed might actually pause hikes at the next meeting, and the signs that inflation is falling.
All right, Sanjana, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you very much, Jill.